Hi, this is Mark from Altcoin Buzz. I'm getting a lot of questions around what website I'm using for the charting when we're doing technical analysis. People asking about what's going on with Bitcoin right now. Other people asking about what indicators I use and what they all mean when I'm looking to do the technical analysis. And so today I thought we would look at Bitcoin and answer those questions for you all at the same time. So we'll chart Bitcoin together. I'll go through the indicators. I'll go through 3 big indicators that you can use that are going to give you a very good sense if you're just starting out with technical analysis of what's going on with the coin in its particular market phase. So tradingview.com is where I do the charting on. It's free to sign up, and this is to be the home page. And one of the things I want to point out here is under the ideas section, as you're starting to get used to doing technical analysis, you can go under the ideas section up in the hyperlink to the left, down into cryptocurrencies, and you can see some people making comments on different currencies and what they're seeing in the chart. And this gives you a very good idea and a different perspective from a lot of different folks. Because at the end of the day, what we're doing is this is not a science, okay? This is more like art that is being painted with mathematics and data. And just like art, we could interpret some abstract differently. Like I might look at a piece of abstract art and say, oh wow, look at those 4 people having sex. That's pretty provocative. You might come up and say, no, that's not 4 people having sex. That is 4 animals. And another person might come up and say, you guys are wrong. It's animals and people together, which is really sick. We all kind of saw the same thing, just maybe not in the same way. And that's a little bit what technical analysis is like. So this page, when you can see what other people are looking at and how they're interpreting the charts and the indicators, using those together, will help ramp you up very quickly. Okay, so then we want to go to Bitcoin. We can type in either the symbol or the name of the coin, and there's a number of different pairings that we can look at. We're going to look at Bitcoin dollar on Bitfinex. And one of the things that we talked about before that's pretty neat on TradingView is this technical analysis summary sums up a number of indicators and oscillators together, and then it gives an overall score and puts it on this meter as to where those indicators and oscillators are telling us we should be in that coin. It's just a neat tool. Take it for what it's worth. It's a starting point anyway. And here we are. We're on Bitcoin on the USD one-day chart, and I have some trend lines drawn in here. We're not going to go and spend a lot of time on those right now, but we're on the one-day chart. If you go up into the left-hand side, you can change the time frame that you're looking at. So right now, each one of these candles is representing 1 day's worth of price action and trading. If I go up into here and go to the 4-hour, each one of these candles now represents a 4-hour period. So going back to the 1 day, we're going to start with exponential moving averages. What the exponential moving average does is it takes a certain number of these candles and averages it out over time. So if we want to average out a week of candles on a 1 day chart, then we'd be averaging out 7 candles to get us to that week. And then it'll plot it on a line, and as a new day closes, we would add that into the average and drop off the last one, the last candle in that data, and we would plot it on the line again. And exponential moving averages factor in one other thing, and that is that they weigh in a little bit more recent price activity versus the back end of the range, because most traders feel like that is the most relevant data at the time. Right? So that's why they might use exponential moving averages. To do that, we're going to go into indicators. We'll go to moving averages, and you can see you've got moving average, exponential. That's what we're going to be using. And we just click on that to add it to the chart. I've done that a few times. So here we've got 3 moving averages, and I've got them set to 7, 21, and 60 on the 1 day chart. So let's just unhide those. That's this eye right here. And you can see how they've plotted out now on this chart. My 7 period, my 1 week is the blue, and that's why it's so close to the 1 day trading. And we'll look at how that plays in just a minute, or what we might look at that for, or how we might read that. We've got the median, the 21 day, so basically a month's worth of averaging out. And you can see right now our week is trading below the month. And then we've got basically 2 months on this red trading average, or 60 candles factored in there. And we've got tremendous pressure. We've got resistance against the 7-day moving average. We've got trade happening under the 14-day, the 2-week moving average, and under the 2-month moving average. All that pressure is happening above our price action right now. And that 1-week trading average has been acting as resistance since this point back here. You can see we come up against it, we hit it, and we cannot break through that 1-week trading average. We traded along that line right here, and then we dropped back below and used it as resistance again, and we're using it as resistance again. So we look at this and say, okay, this is all the information we have right now. We don't just use moving averages as the only indication to make a trade off of, or get an idea of where the coin's going to go. It's just one of today's, the three that we're going to use. But this is not a good sign. So the first thing that I'd be saying to myself is I want to see us price reverse again and come back over the 7-period trading average and use it as support before it start feeling encouraged. Just again off this little snapshot. In general, people will use trading averages and look for crossovers. So back here where the 1 week crossed over the 1 month, that would be a warning sign. Certainly when both or all three are below the monthly trading average, that is a very strong, this trend of the fast and the medium being pressured by the long term like we're in right now. That kind of downward pressure is not encouraging. So let's take those off and let's add in one. Now that you understand what a moving average is, let's add in the MACD, the moving average convergence and divergence oscillator. That's using moving averages. And now that you understand those, it'll make some sense. And it's a great indicator to use. So we'll add in the MACD, and then that's going to show up underneath our chart. It's not going to overlay on top of the chart like the moving averages did, but it's going to be below our chart. We can take a look at it. So now what you've got is a little bit of different mathematics, but essentially still the same thing. Moving averages down here, the blue and the orange line, and this blue is factored in a different way compared to the exponential moving averages that we looked at the top. But basically you've got that, and you've got the orange line, which is considered your signal line. And those are the signals that we're looking for, is when do those cross over, this fast moving average over the signal, both up and down. Once that's happened, we've got a zero line here and a histogram. And the histogram is telling us how much distance we have between these two moving averages, the signal and the moving average, what kind of distance we have there, because that gives us the feel for the momentum. And that's both to the upside and then the downside, right? So once it crosses over that zero, we're in downward momentum. And ultimately, we'd want to see most of the action happening above that zero line, much like we did back here. So if we're just looking at the current time period right now, we're way below that zero line at this point in time, with our moving average crossing over the signal line. I don't know if you can see that, crossing down over the signal line once again. And so this indicator right now on the 1-day chart is not encouraging, right? So we've had exponential moving averages that don't look great. We've got a MACD that's got a signal crossing to the downside below the 0 point. No histogram really forming from this standpoint. So we could just be flattening out here. We'll see. But again, nothing signifying a reversal based upon those two things at this point. So let's add in a final indicator. So the next thing we're going to add in here is the relative strength index, the RSI. That is going to be another one that lays below the chart. So here is our RSI in purple. And what this is doing is it's taking a calculation of the price action and plotting it into these ranges. And this is on a scale of 1 to 100. So generally, when we get into the 70% range, it is thought that that coin or stock is in a position that it is overbought. And as you get into those overbought situations, then at some point you're going to be looking for a correction. At the bottom is oversold, and these are opportunities now for the stock to rebound and come back up. Now, the thing about the RSI is that, and we've got a nice little example here of what is called divergence. So when a chart is doing one thing, right now this chart is going and making new lower lows, right? When a chart price action is doing that, and the RSI is actually making new higher lows. So if you can see here, here's the low on the RSI, and here's potentially where the next low is going to be. So we've got higher lows on the RSI, lower lows on the chart. And those two things are directly the opposite, right? We've got divergence going on there. So what I'm looking for now is, can this become a higher low? It hasn't quite given us a reversal yet, right? We haven't seen it bounce off of this area yet, which would confirm the higher low. If it does a little blip like it did back here and continues down, then that shows that we're still in this momentum of a downward trend. Now, if that happens, and so this is where we get into the if then what, and that's just the reality of looking at charts. We're looking at them with two frames in mind. What happens if it breaks to the upside, and when do I think I can be confirmed in that prediction or hypothesis? And what happens if it breaks to the downside? So in this example, if we break back up on the RSI, if we can get a bounce off of this and start trending back up, that would give us the bullish divergence that we're looking for, and that would be a good entry point to potentially start looking to get back in the market. If this continues down and we break below here, and this really just becomes a mimicking of the same lower lows that we're seeing on the chart, then we're in that continued bear trend. From there, we're having to look to see what the next support level is. I mean, the RSI can be used as support and resistance levels as well. If you want to do that, you can use that, theoretically look at trend lines on the RSI as well. And right now, your support level from an RSI standpoint looks like it's in this area right where we're at. That's the support level we want to stay in. So you can see that we kind of bounced off of it there and bounced off of it back here, and pretty much came down and almost met it right there. So you can use RSI as a support and resistance and trend line in the same way that you would use the price action at the top. You can use it that way too. If we were to break to the downside some more, we may be looking to test the swing low that we had back here. We broke through this previous swing low back here, and so this would be where we might want to test, where the market may want to test some liquidity, is back in this last swing low, which was $5,400. That's one way that we could look at and see if it breaks to the downside, what kind of potential price range would we get into. We could confirm that potentially with a Fibonacci. I'm not going to go into how this tool works and all of that, but we could look at it from a Fibonacci standpoint as well and just see where that puts us. If we break to the downside, then yeah, that 54 could become a reality, but it looks right now as if this 786 that we're kind of sitting on top of right now potentially could be our support. Again, that would be confirmed if our RSI can bounce back off of this area right here, right? And come back up. So that's how you use these things together to paint yourself a picture to see what's going on. And you have to interpret these things the way that you feel comfortable with, what your skill level is, and looking at these and adding up those pictures together to see what you got in front of you. So in summary, if we look at this horizontal support line, we could be testing that $5,400 range. If we look at the exponential moving averages like we looked at before, there's a ton of pressure still coming to the price action, and we're using that 7-day moving average right now, the 1 week, as resistance. That's not a good sign. If we look at our MACD with a crossover to the downside against the signal, trading way below that 50, that zero line, that's not a good indicator. The only positive that we had in this whole set of evaluations that we're looking at, and I suggest that you go and do some more searching around for RSI divergence on YouTube, just so you get a sense of what we're talking about. The only positive that we saw was this potential bull divergence that we've got going on right now. It has not been confirmed yet. We have to see it bounce and make a higher low. Again, go do some more research on what this divergence looks like. And if I had to make a prediction, that's not necessarily a reversal bull divergence, but potentially just stopping action to this downward price movement that we've had. So if I had to put everything together and make a picture for myself, I'd say we're looking at probably not breaking down to the $5,400 level. I think that bull divergence is a stopping action for us right now in this range that we're in, but that may just be a potential stop for a little bit before we hit that $5,400, because we're going to have to see how this plays out a little bit more, because none of the other indicators give us any kind of sense that this is going into a bull run again. So that's how I'm looking at this picture right now. Others may disagree or see some of the same things, but not necessarily agree with what I'm saying. That's, again, the art of technical analysis on the charts. And thank you once again for spending your time with me. I hope you got something out of it. Visit us at altcoinbuzz.io, where you can see all the blog posts that we have throughout the day. Get links to get to our social media very quickly on Twitter and Facebook. And don't forget to leave your comments below, along with subscribing and hitting the alert button so you know when the content's been posted up here on YouTube. Until next time, may all your trades be good trades.